everybody, welcome back to my channel. I'm so excited that you're here. My name is Nancy Wallace Lobbs, and what I wanted to do was get this quick little video out about my presentation at Quest Trust Company Lunch and Learn. And what I presented on was a changing real estate market and what strategies work well in any market. And hey, I'm going to give a shout out to my latest book, Simple Property Management. You can find it on Amazon. If you're into knowing more about how you can manage your rental portfolio more efficiently, check out my book. So let's get started with what changes are we seeing in the market that indicate it is changing. So number one, interest rates have gone way up, right? Now, as an investor, this doesn't bother me too much because obviously it's going to cut into cash flow, monthly payments, and things like that. But as an investor, if I can get the property, if I'm buying a property and it's going to cash flow and it's a good investment, then the interest rate's okay with me if it's a little higher. Because as an investor, I pay higher anyway through my asset-based lenders, through my private money lenders, and through my hard money lenders. And all of the interest that I pay is tax deductible. So that's why it doesn't really bother me as an investor. But some of the things that we can look at as far as investor opportunity is the changes that are going on with homes for sale in the market. So just this year, they already saw a decrease in the sales price. So what does that mean? So as more time goes on and houses stay in the market longer, one, there's more inventory. Two, now sellers become a little bit more motivated. And so now you can start seeing some opportunities in the market. And basically what we have to look at as investors is what worked yesterday is not going to work today. So some of the perspectives that I've seen as far as changes in the market. So just the number of houses that are for sale now. So back in 2021, we saw that there was a little over 55,000 houses were listed for sale. Then fast forward to this past July, where there was more than 83,000 houses for sale. And that's more than a 50% increase in the number of properties. So twofold: one, more properties on the market, and number two, they are not selling as fast as they were. So the longer a property sits on the market, the more motivated a seller may become if they're really wanting to sell their property. And then the price decrease, if you'll notice, of that 83,000, 36.1% of those properties came down in price. So that's a good sign for investors because, again, it was sellers were getting 10, 15, 50,000 over. We remember those days, right? Well, that's not happening now. So now sellers are kind of realizing, okay, that bubble is over. And now, they're going to have to be a little bit more motivated and negotiating now price adjustments. And then rents. Now, this is a really good thing for investors who are looking for buy and holds because rents, depending on the area that you're in, have increased anywhere from 13.5% to 21%. That's a huge, huge increase. So where are those opportunities for investors? Well, all you have to do is look around. Tired landlords. So just in September of 2022, Dallas County, so I'm in the Dallas, Texas area, filed over 4,000 evictions. That's the highest month they've had in 5 years. Now, the eviction moratorium is over. Dallas County still has some money for tenants and things like that. But what's been happening now is people who haven't been paying their rent are getting evicted. Days on market, September, was up to 42 days, and it is growing. I just went into an area where now the days on market are now at 75. So sellers are not selling their house as fast as they were even 6 months ago. The number of listings, okay, so this means expired listings. What this means is houses that were put on the market to sell. For whatever reason, they didn't sell, seller didn't get their price or whatever, and the listing just expired. Now, that could be anywhere from 30 days to 60 days to 90 days. Most listing agreements are 60 to 90 days. So that just means they didn't sell. That's actually an opportunity for you as an investor to get a list of those expired listings. Foreclosures are up. Now, the foreclosure moratorium, forbearance. But now we're starting to see that market, that foreclosure market is starting to increase because people that did go into the forbearance program, now the money is due and they're not paying the money. And then probate. And I threw this on here because no matter what happens in the economy, people pass away. Families have to sell the home. These properties are, in some kind of distress, or maybe the family's in distress. So that's still always and continues to be an opportunity for real estate investors. So as an investor, we need to have a certain mindset on our investing strategy. So number one, maximize cash flow. Now more than ever, we need to look at those properties that we're looking and what is the cash flow that we're receiving. Is it cash flow from the rent? Is it cash flow from your owner finance? So you really can't afford at this particular point in time investing, looking at properties that are going to be negative cash flow, meaning even $50 to $100. So you don't want to get yourself in a position, if you will, during this particular time in the market where you're underwater, so to speak. Reducing your bad debt, credit card debt, just kind of really hunkering down on your financial situation and looking at your budget for your investing, for your marketing, what can you do to kind of tighten the belt, so to speak. And then look at diversifying your assets. Like, what other things can you invest in? So, maybe passive investing, such as private money lending. There's a whole lot of different ways you can diversify, your investing. Buy and hold real estate is always a good strategy, pretty much in any market. But right now, with increased inventory, sellers, becoming a little bit more motivational in wanting to sell their house, you might be able to, and rents increasing. So you see how you can get a property and have it as a buy and hold, get your appreciation, get your cash flow. Avoid speculation on deals. So here's what I mean about this. So if you are looking at land deals or development deals, with the way things are in the particular economy, you just want to make sure your numbers are solid, that the plan for the road development or the development is going to be going through, because your money is going to be tied up for quite some time in those types of deals. And then another thing that you could look at is if you have equity in your current portfolio, because as the interest rates continue to rise, I don't know how high they're going to go, but I do think they're going to go up in 2023. Do you have some equity in properties that you can utilize, that you can leverage, if you will, to invest in some of these opportunities that are going to be coming up? So you know what? At the end of the day, everyone needs a place to live. So focus on strategies, investing strategies that provide that solution. So rentals are going to be a great investment strategy, and that could be multifamily, single family. So those are going to be great investment strategies going forward over the next, year or two. Owner finance, love this strategy. Build your list of private money lenders. So how I do it is I have private money lenders that they will lend me the money to buy the property, and then I have a buyer who's going to pay me more in interest payments than I'm paying my private money lenders, and the difference is going to be my cash flow. Student housing, colleges, universities, are back to business. That means that student housing, maybe a couple of years ago, this wasn't the best investment, or even a year ago, because the universities weren't in session and whatnot. Everything was Zoom. Well, now we're getting back to normal. So, student housing is a great thing to look at. Purchasing property subject to. If you don't know this strategy, get familiar with it, because there's going to be people that have low interest rates on their current mortgage. So imagine that you can go and buy a property subject to the existing mortgage. Basically, you're taking over the mortgage payments for the seller. There's a whole strategy on that. And their mortgage interest might only be like 2.75. And then private money. As things in the economy tighten up, therefore credit's going to tighten up. So a couple things. One, you can build your list of private money lenders. That's why I was at Quest Trust Company. They have tons of people that have, invested in Quest Trust Company. They have their self-directed IRAs. cultivate those relationships, because they are looking for an investment, and maybe they want to be passive investors, so they're going to become private money lenders. Or maybe you're one of those people that have money in a self-directed IRA account and you want to become a private money lender. So we're seeing rates increase not only among private money lenders, but hard money lenders. It's going to be a little competitive, so check it out. So you can too, you can invest in this market with solid investments, get your cash flow, be mindful of your budget. And as I was at Quest Trust Company, these strategies are what builds wealth. And you can grow your self-directed IRA tax-free or tax-deferred. Properties that are held in the self-directed IRA are not reported on your tax forms because the IRA is the one that holds them. Of course, there's rules and restrictions on how to use a self-directed IRA. And whenever you do this, you have to work through a custodial company such as Quest Trust Company. And there is detailed paperwork, and you have to close with a title attorney. So that's why I do these lunch and learns, so that people can learn the strategy of how to build wealth within their self-directed IRA. You can do this with private money lending. You can purchase property with what I call an option agreement. You can use more than one self-directed IRA to buy property, which is called having an undivided interest based on the percentage of investment. And then you can defer or delay your taxes on the investment. It's a great strategy. So what to invest in a real estate during a recession, or right now in this, in this particular time in our economy. So the best investment, in my opinion, is housing. It always has a demand no matter what happens. So residential properties, this could be multifamily, the student housing, owner financing, buy it right? And do your own due diligence, because your ultimate goal is to get appreciation and cash flow. So I want to thank you so much for hanging in with me today. Hey, if you haven't subscribed, please hit that button below. Give me a like. If you have any questions, reach out to me at nancy@kbnhomes.com. I'd love a follow on Nancy Wallace Lobbs or Wallace Lobbs and Associates. I hope you're all having a great day. Stay safe out there, and happy investing.